look at a really active and volatile session yesterday. Sterling had been trading quite strongly in the morning above 129 and began to sell off. Interestingly, if you look at the charts, we got quite a lot of the move before the vote results were announced, so late afternoon UK time. We interpreted that there was a lack of confidence around the vote, and I think the tallies that people were hearing about coming through, that the market was sensing there was a risk of a much bigger Conservative Party defeat that may have been predicted earlier in the morning. So it was really a case of, if you like, sell the rumour and buy the facts. So the vote did come out with quite a big defeat for the government, which was unexpected. Another sharp sell-off then through 127. And then the market reacted quite strongly and quite well because it began to focus on the forward. Theresa May spoke about cross-party coordination and some sort of agreement, and it rallied back quite quickly, and we saw some good buying through the late London session through 8, 9 o'clock. So it was active, but a lot of the price action actually happened before the vote was announced, and we didn't see the type of fireworks after the defeat that some people might have expected.
James, there seems to be a view here in the sterling market that Theresa May's reassurances that there will be an orderly departure suggest that a no-deal Brexit is now off the table. We might get an Article 50 extension just to give room for that negotiated departure. Do you buy into that scenario? Because that seemed to be what stabilised sterling.
I think, you know, you can even roll it back through the last 5 or 6 trading sessions. It's become increasingly apparent that there isn't a parliamentary majority or a drive for a no-deal Brexit, and the sterling market likes that, and it's appreciated this year because of that. Nothing or everything, if you like, that happened last night continued to validate that view. You know, the market wants certainty. It's okay with the idea that Article 50 get delayed a little bit and pushes things out, but the idea we're going to continue to talk and work towards an agreed resolution, for now the market feels that's positive, and it doesn't see a no-deal Brexit as a very likely outcome.
James, I'm going to commit heresy here. I'm going to say let's just go with the fact that there's a soft Brexit and we put that aside. The pound is what it is on the back of that. Shouldn't we actually be trading the pound on a whole host of other fundamentals, i.e. what's going on in the United States in terms of the cable pair as well, because that's far more important for the destiny of cable than what's going on Brexit. If we have to look at UK domestic factors, let's ignore Brexit and look at the horrendous situation with household debt, with the current account deficit, with our trade deficit as well, none of which will change dramatically with or without Brexit as well. So do we need to look at other domestic-oriented factors, both in the US for cable, in Europe for the euro-pound spread as well, and of course what's going on a horrendous, I think, asymmetric economy in many ways here in the United Kingdom? Let's forget Brexit when trading this.
Oh, look, absolutely. I think a lot of what we've seen this year, which has supported the cable rally, has been the weakness in the US dollar, you know, as the market's priced out potential Fed hikes through this year. Now, our own view here, you know, backed up by our economics and our strategy teams, is you're going to get a relief rally if and when a Brexit deal is agreed. You know, the market will get the certainty it wants. However, thereafter, the focus is going to be on the economic data, if you like, the nuts and bolts of what's driving the economy. But for now, with such a historic event due to be agreed and still a lack of clarity around it, it's really hard for the market to go beyond that. And our expectation is if or when there's a deal announced, you'll see a sterling appreciation, and it could get us up to 135 or even higher. However, you know, the market's going to turn around then, evaluate the data coming through. You know, there are some imbalances in the economy, as you've pointed out, and that may lead to some tempering of expectations. But, you know, we need to deal with the matter at hand that's certainly taken up a lot of, you know, airwaves over the last 24 hours, and we're going to expect that to continue for the next days at least until we get some more certainty.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.